So most traders blow their account because they're making trading too complicated. Truth is, you only need 3 steps to trade profitably in the markets. And when I teach Lindsey, I call it high, low, go. Okay? So this is the same way that I teach her, and if she can learn it, you definitely can too. So by the end of this video, you know exactly how to enter, manage, and hold trades on the higher time frames. So here we're on the daily. We have our 4-hour, daily, 4-hour, 1 hour, 15-minute, 1 minute. So as a beginner, this is how most traders fail. They only live on this chart. So they're chasing the entries, not knowing what's going on in the bigger picture. So with trading the 1 minute, I do have a strategy for this where you don't necessarily have to go with the bigger picture. But for beginners, this is another way to trade if you don't want to scout the markets and you want to hold your trades longer. Because on the 1 minute, you can see a small pullback and think that the market is reversing, when in reality it was just a correction inside a bigger, like on our higher time frames. So if you don't understand structure, you're basically gambling. You're guessing in the markets. You're not trading. Because structure tells you where to buy, where to sell, and when to hold. So we're going to start on our 4-hour chart. So let's start with our high, low, go. So this is how you read market structure. Clearly, the market is going in an uptrend. So we have high, low, higher high, higher low, higher high, higher low, higher high. We had some liquidity grabbed right there. This was likely 2 o'clock. This was news. Then we have higher high, higher low, higher high, higher low, higher high. And look what we're forming here, a higher low. So in an uptrend, the market makes higher highs and higher lows. That's telling you that the market wants to go up. The low that the market is forming is just a pullback for the market to rest, gain some momentum to push up higher. So this is how we have our high, low, go. High, low, go. High, then it forms a low, then go. Breaking this high, going further. Another high, forms a low, then we go. Very simple. High, low, go. Every uptrend follows this, and every downtrend is just the opposite. So if you can repeat high, low, go, you can spot an uptrend or downtrend without guessing. If you can't repeat high, low, go, that means the market is consolidating. The market is not trending. So you shouldn't be trading. Okay, we're going to drop down to our 1-hour chart. Very nice, clean market structure. You can tell the market is going up. We can highs, lows, highs, low, high, low, high, low. Very clean structure. Love trading markets like this. So with this, let's say we start here at this high. We have the market pull back. Then what does it do? Let's mark the high so you can see it. We have this high. The market pulls back, makes a low. Then what does the market do? It breaks this high. So this is, as I tell Lindsey, a trend clue. This is telling me the market wants to continue up. However, when the market breaks this high, I'm not chasing that. There's a bell going off in my head saying ding, ding, ding. This market wants to go up. So we see the market break this high. It's breaking here. So we're on alert and we're waiting for the market to pull back. So we see the market break, then we wait. We don't know how far the market wants to go up. So if you're chasing that, you're not going to know when to get out of your trade. So that's why we wait for the market to pull back and create a low. When we see a low created, it's almost time to go. And you see when we go, the market breaks another high. So it breaks this high. We're getting in around this area. We're going to drop down to lower time frame for our entries. But I'm just giving you guys an idea of where your entries will be. And we're riding this up at least to the high and leaving runners for it to go higher. So again, the same thing. We have a high, we create a low, then we go. Here, the market breaks. So we see that break of structure. We create a high, we create a low. This was today. The market dropped beautifully today. So we break highs, we wait for the market to pull back. We don't know how far the market's going to pull back every time. We haven't broken this low. So we're going to watch the market and see what it does. Those are your 3 steps. Again, let's go back even further. High, low, go. High, low, go. Very simple 3-step process. So now we're going to drop down to the 15-minute. And this is going to give you more candlesticks and also more chances to see what tiny market structure is going on the smaller time frames. So here, we're looking for a signal that the market wants to go up. This is the same high that was broken. Again, we're not chasing this move because we don't know how far it's going to go. So we broke this high. So we're waiting. Still not breaking that high. Still waiting. markets making lower highs and lower lows as it's correcting on the lower time frame. Then we get here and we create the low. Then here we start to see a shift. You notice the market comes up and it makes a higher low. So this is a sign that it's almost time to go. Another high, another higher low. On top of that, we get a break above this high. In addition to that, we're above the high that we broke in the first place. So our entry is around this area right here. Then we take it up at least to this high. And look how much further it went. So this is just a very simple way using market structure to get into trades. So going back to the 1 hour, this is the area we were just looking at. And that would have been our move. Let's look at another example. High, low, and continued right through it. High, low, continued right through it. It's very simple. Okay, I got that chart cleared for you guys. I do trade in 1 minute, so I have more things. But for the simple strategy, what I showed you, that's it. High, low, go. High, low, go. When the market breaks here, what do? We see the break. We wait on the market to pull back. Then we look for our entry in this area. So there's a break structure here. See the candles breaking it, pulling back, and then continuing higher. Very simple process for trading. So going back to the 4 hour, for those who want to swing trade, this works very well for holding longer trades on the higher time frame. Because with the higher time frame, it filters out the noise, like the candlesticks that you see on a 1 minute, you don't see all of that. So instead of stressing yourself out on a 1 minute chart, you let the market breathe and you just wait. So think about it, like one higher high, one higher low on the 4 hour, that could be 2 days. Each of these candlesticks is 4 hours worth of movement. So these trades do take longer to play out, but there's less noise and you know where the market's going. So to recap, which you guys should definitely have it by now, high, low, go. High, low, go. High, low. So I just wanted to bring this to you guys for those who want to hold their trades longer and work off the higher time frame. I use this for my overall trading for different markets. However, with NAS 100, I just have a precision strategy that works super well on the 1 minute. So I do trade that every time I trade. But this I have for different times of the day and different markets. So I hope this video gave you some more clarity help you realize it's simple. Don't make it more than what it is. This is basically how you can stop overcomplicating your trading. Keep it simple. High, low, go. This is the part a lot of people run from or ignore or think they got it because I was people, so I know exactly how it is. However, here's why most traders still fail even with this framework. You have to trust yourself. A lot of traders, they just don't have conviction. They don't trust the structure. They don't trust their learning. They're not disciplined. So in trading and in life, the market tests your frequency. So if you panic in a pullback, you're breaking the structure before the structure does. However, when you hold steady with a knowing that what you're learning works, trusting yourself, you get rewarded with that continuation. It's the same way in life. The frequency first, then the results follow. When you're in the right frequency, that leads to you taking action through that right frequency, leading to the result you want to see, which is ultimately, for us traders, profitability. So please, guys, stop chasing the indicators and stop overcomplicating this. Trade the structure, trade alignment, frequency first. If you're not mastering this, you're gambling. You're taking a chance in the market. So just learn it, practice it. I tell my students to back test and forward test. Keep it simple.